Hello traders, and welcome back to my YouTube channel, IPDATrader. Now in today's video, we are going to be talking about putting our money in the best position to win, which is an idea and concept that I've previously spoken about, but we're going to be focusing a little bit on that, a little bit on trading psychology, and after that, I do have a position that I'm looking to take on GBP USD. So I'm going to be giving you a little bit of a context in terms of what I'm looking to do with the trade, what I'm expecting to happen, and things of that nature, right? We're going to be breaking that a little bit down, focusing on putting our money in the best position to win, and understanding a little bit of our own psychological makeup, which is pretty much an essential tool for your trading success. So with all that being said, I think this might be a shorter video. Nonetheless, I'm gonna make sure this is packed with value and information. Not gonna be wasting your time. So with all that being said, we're gonna get started with today's video. So guys, here we are on the charts, not necessarily have a PowerPoint presentation or going over into the drawing board. We're just going to be talking about some stuff related to trading psychology, okay? And one of the things that I want you to keep in mind when it comes to actually trading, being a trader, things of that nature, is that you always want to execute when you genuinely believe that that is going to be a great position for you to win, right? Otherwise, you don't. If you're hesitating, if you have doubts, if you're not sure, you might as well just skip the trade, because what you have to understand is the difference between a slot machine and what we do over here as traders, right? So the difference between those two items, right? There's really not much that differs between those two ideas. But the main thing, right, that allows you to win as a trader and that will never allow you to win as somebody who goes to the casino and plays the slot machine is that in trading you have the ability of waiting for a pattern to appear before you actually execute a position or place a bet, right? It's the same concept. In a slot machine, you first have to put your money on the line and then some pattern is going to appear, right? So understand this very well, because what this allows you to do is this allows you to put yourself in a position where you can consistently be extracting money from the markets as long as you're disciplined in your trading, as long as you have a system that you follow. And once again, I've said this multiple times, having a system does not mean I execute the very same trade pattern every single day. It just means I'm coming to the charts ready to execute based on the same principles and ideas. Meaning, right, for the way that I teach and trade, is that I'm going to be looking at my timing. That's going to be essential, right? Your timing is part of your edge. You don't want to ignore the timing. There's certain things that repeat. If you look through the candles, right, and unfortunately this is a 3-hour time frame, but if we went through the 1 hour, if you look at the candles, there are certain moves that repeat at certain times of the day, right? As an example, when we talk about timing, you have London Open. That's going to provide you with volume and volatility. So if you're timing the direction correctly during that period of time, the odds of you having a profitable trade that actually runs and moves is much higher, right? So we have, and once again, that's just London Open, have NY Open, you have NYSE Open, which is 1.5 hours after NY Open. You have Asian session, right? Asian Open. You have Sydney. You have all these different ideas that provide you with information in order to make an accurate decision. And once again, the good thing about our business is that you have the ability of waiting for something to appear that you're comfortable with before you actually put your money on the line, right? Which is the opposite of what a slot machine player is able to do, which once again leads to inconsistent results and you blowing your money. So use that idea, precious that idea, and you will have a much easier and profitable time as a trader, right? And once again, this is just one of the many aspects that you can use to build an edge for yourself, right? So we have timing, obviously. You also have structure, which we've spoken about numerous times. You want to be looking at multiple time frames, and once again, we're going to be getting into this as I go through the example of the trade that I'm looking to take possibly very soon over here, right? You can see I'm mapping out my structure, and we're going to be getting into that later. You have your liquidity story, which is when you assess your visible, hidden liquidity, daily cycle, confluence, multiple things, right? Obviously, the most important thing is for you to actually be able to identify great POIs, right? We have great POIs. We have POIs, which is going to be areas of interest, where you want to do business at, and once again you can look for key levels within those POIs, so we're going to be doing that as well. Key levels, you can see I'm using all these different items in my charts. You can see them being present over here, right? As an example, timing right now at the time of this recording, the London session just opened 24 minutes ago. So I do know that right now volume and volatility is likely to be seen. So if I'm gonna be right, I'm gonna be right. It's gonna move very quickly, and if I'm wrong, I'm gonna be out of the market very quickly as well, which is what I want to do. I don't want to have to be staring at my positions moving in profit, in drawdown, in profit, in drawdown, and really not going anywhere, right? If I'm wrong, I want to know that as soon as possible and go about my day. Maybe journal the position, write down specific data you want to keep, and move on with your next execution, right? So that's why I usually like to trade during those periods of time. Also, it allows me to have a higher probability in my experience in trading. POI mitigations that occur during high volume times are more likely to hold, especially during the NY session. That's really where you want to be focusing on as a trader. So if we go back over here and we have all these different items, obviously you can try and read order flow, which I've spoken about as well multiple times. It is where you're within a higher time frame block, and this is important, and you're reading the delivery, right? If this is a bearish area, as price trades into your block, and we're actually going to be using a different tool such as path, as price trades into your area, you want to see when, once again, bullish order flow is breaking, in this case as an example over here, and bearish order flow starts holding, because that's when you know that the market is switching from buying to selling, and that's within your higher time frame block where you're already expecting selling to occur. Then that's going to be a great position to put your money on, so you can probably take win, right? As such, you can see that price moved up and provided you with bullish structure as we traded into our block, and eventually price hits your area and order flow starts shifting, bearish order flow starts holding. Once again, it's not for me to decide when exactly in this transition you want to be part of it, but what you have to do is spend some time watching those mitigations, look for reoccurring themes, and then adjust and trade based on what you see fit for you and what you think is comfortable for you. Okay, that way you're gonna be having a great probability of actually having somewhat of a decent execution, right? So once again, going back to the beginning of the conversation, guys, you have to appreciate the fact that in trading, we do have the ability to wait for a pattern to appear. Once again, what I mean by pattern may be a indicator signal for you, or whatever it may be that you use to determine when you get in positions, we have that luxury of waiting for it to appear. And what majority of traders fail to realize is that they worry too much about what everyone else is doing. Maybe they're in 10 different group chats, and one trader over there took a position on USD ZAR. You've never traded USD ZAR, but you started your day with a loss, and you jump in, right, without not knowing what you're really looking for. Or you take a loss, right? Let's say this is your stop loss, this is your entry, price taps your entry, spikes, takes you out at a full stop loss, then drops, and you jump right back in because once again you feel betrayed, right? The market has just taken you out and the market has now started dropping. Now you feel as if the market owes you something and you have to be jumping right back in instead of looking at this scenario from a logical standpoint, understanding that you've just taken a stop and that you just have to be waiting for your next opportunity to appear. Whether that is in 5 minutes, 1 hour, 1 day, 1 week, I don't know, right? That will be determined based on the time frames that you use. Obviously, if you like working with lower time frames, then you're probably going to see your next opportunity much sooner than somebody else who works with higher time frame, and now they have to wait for that new setup to form, right? So please precious those ideas. Every time you want to take a trade, if you had to do 10 push-ups before actually the execution, would you take that trade, right? Ask yourself that question. Make sure that you're not gifting and throwing your money away to the richest people in the world already, right? Because that's essentially what you're doing. If you're constantly losing because you cannot control yourself, you have to be thinking about what you're doing to yourself. You're using up your own resources and just burning your money or giving it to the richest people in the world already. You might as well just donate to charity or do something else with that money, because if you're not going to be on top of your game, if you're not going to be journaling, right? And I can show you some information of my particular journal. I think I will go through that in a future video. But you have to be doing this. If you're not doing this, you're not going to get anywhere. And yes, it sucks looking at a trade for 20 to 30 minutes and looking through the variables, looking to see what really happened, looking to determine how next time I'm going to be able to make a little bit more money of that position, or how next time I'm going to be able to make my loss smaller if it happened to lose. It sucks. I agree. 20 to 30 minutes on a single trade is a lot of time, but that's what you do as a trader. You want to be a trader, you have to look. And once again, this is just my particular edge. You don't have to trade using these informations, right? This applies to every single trader, but structure, timing. Some people don't use timing, it's fine. Some people don't use POIs, perfectly fine. Some people don't use order flow. You don't have to. But what I'm trying to make you understand is that this is being a trader. And if you don't like it, you should not be trading. You have to journal. You are a risk manager as well. You have to determine, hey, I've taken a 3% loss today. Looks like the market is a little bit ranging, maybe not really conducive to what I'm doing. I need to stop trading now, because if I don't stop fairly quickly, I'm going to be digging myself into a big hole and I'm going to be regretting it the next day. So now that I've taken a 3% loss, I'm going to stop for the day and I'm going to come back tomorrow and see if I can identify different market conditions that may be a little bit more favorable to what I'm actually trying to do as a trader, right? So these are the different items. I just wanted to quickly go through this, excuse me, because once again, I do see the very same issues arise as traders, right? Not being able to emotionally control yourself is something that will make you lose. Not journaling and keeping data and tracking information is something that will make your edge slimmer. not waiting for that edge to appear before you actually execute. Because once again, going back to the previous example, you jump in a new trade because one trader in a group is telling you about it, and you know nothing about the pair, the setup, nothing, and you just jump in, is making you lose long term. Whether that trade ends up winning or losing doesn't really matter. You're building bad habits for yourself that will eventually lead to losses in the markets, right? That's what you have to always understand. Manage your risk, journal your trades, make sure your executions are in line with your plan, and just go through the process. Enjoy, do not worry about the money, and let time do its thing. So with all that being said, that's sort of what I wanted to talk about. We're now going to be breaking a little bit down the GU position that I'm looking to take. Once again, I'm not too concerned whether this loses or wins. I'm already using reduced risk based on my plan because I'm taking a risk entry over here. I'm not waiting for confirmation as such. I might add risk if I do see the confirmation that I'm looking for and if I'm in front of my charts, but I'm looking to take a risk entry within these two levels, and we're going to be breaking down why I'm looking to do that, because there's multiple reasons for that, right? I'm not randomly picking this just because. I do have a reasoning behind it. So what I like to do is go through the intraday time frame, such as the 4 hour, and you can see what's been happening recently, right? We've been delivering lower lows and lower highs, are constantly being sort of shown in the charts, right? In massive downtrend, looks to me like we're seeing a little bit of a retracement, which once again could continue further up. I don't know, right? We do have multiple areas where I would love to go short with confirmation, but based on the information that's provided to me at the time of my decision-making process, structure tells me that this is a potential lower high, this could be a potential swing high liquidity, and we could now be looking to drop, right? At this area over here, we have a particular POI, which I've refined to a 2 hour block, as you can see, above a pool of liquidity. So that fulfills my criteria. We do have liquidity on the bottom of the range, which fulfills my criteria as well. Go through the 1 hour, we can see a little bit of more information. Looking at today's cycle, once again, what has happened over here is that we've tapped the block, moved down, broken internal structure on a lower time frame, and now we're retracing back into the block, which allows me to potentially execute a position over here, right? I repeat it. Higher time frame structure, bearish delivery, lower low, potential lower high formation, mitigation of the block, internal break, potential retracement back into that area, expecting to drop from here. Looking at today's cycle, we do also have great confluence, right? If we go through the 15-minute, we can see today's cycle. We have Asian high, pool over here, Asian low, Asian high taken first, anticipating Asian low to be grabbed, right? So you can see it doesn't happen every day, but it just happens frequently enough, as you can see over here, for me to try and take advantage of that information, right? So that's a trade that I'm looking to take. Once again, this is a risk entry, which has a lower probability of success than confirmation entry, so therefore I'm reducing my risk, I'm understanding the risk that I'm taking, and I'm not defined by this outcome, right? If this trade turns around perfectly over here and drops, I'm not a great trader because I was able to do that. If this trade shoots up and stops me out, I'm not a bad trader because of that, right? You should not be judging someone's ability to trade based on a single execution, which is what many people do as well. They think because they took a loss that they're now a bad trader and that they need to overtrade, revenge trade, over leverage. because otherwise they're not going to be making it. You have to let the numbers do their thing, right? Nothing wrong with taking a loss over here as long as I'm well within my risk management. This would be a problem if I was saying I'm risking 50% now, 15% now, and this has to win. Otherwise, I'm just not going to be able to pay rent, right? That would mean I'm a bad trader. But saying, hey, you know what, my usual risk is 1%. I'm using 0.5 here because of the fact that I'm using a risk entry is actually a positive and from somebody who actually knows what they're doing in terms of risk management, right? So I don't want to make this video too long. I hope you enjoyed a little bit of the rant. I hope you understand my rationale behind, once again, the geo shorts that I'm looking to take within this area. And then that's it, right? It's just essentially being able to control yourself, to understand the different items that go into a trade, that we're not trying to guess, even though it's guessing game, yes, but you're trying to put yourself in the best position to win. Always put your money in the best position to win. Remember that. And for that, you have to be going through all these different ideas and understanding them extremely well. So with all that being said, guys, I will update you guys on the trade. I do not have a problem saying, hey, it moved up, I got stopped. I'd also not have a problem saying, hey, it dropped as expected. Great, because I'm not defined by a single outcome, right? So with all that being said, guys, thank you very much for listening. I hope you took something away from this. I hope you enjoyed a little bit of the video. And yeah, I will talk to you guys very soon. Take care, everybody. Have a great day. And thank you for listening.